So the whole accommodative stance of the Fed has been they want to, see the economy getting back to a full employment. And so they have been apt to, leave things very, very accommodative, despite the fact that there seems to be so much liquidity in the system, so much fiscal stimulus, monetary stimulus. They still, are very accommodative. But if the jobs numbers, if it's very good, it's going to be very hard for them to keep maintaining this very accommodative stance. And so they've already kind of indicated that they are going to taper, which only means that they're going to increase the monetary supply more slowly. It's still going to increase. Even though they're going to taper, it's still going to increase. And so the market is just watching for cues as to how much the Fed is going to keep being accommodative or keep being restrictive. Now let's say they have to make a huge adjustment because they've openly said, we're going to let things just happen. Even if we see inflation, we're not going to do anything. We want to see inflation sustain. We want to see these things sustain. But there's going to be a point where if they go too far and things get too far out of hand, then they may have to pull back more than they had wanted to, and that would create a shock to the market. So that's the only thing. But typically the markets kind of give you some anticipation. You would see these big reversals. You would see some signs that things are about to change, and I don't really see that. Every jobs number now is going to be important. To see how much progress we're making in terms of jobs growth, because that's really the mandate of the Fed. Doesn't really even care about inflation. They kind of want to let inflation out of the bag. They don't want to go into deflation. They want to, keep this stimulation going. They feel like inflation is transitory. So whatever inflation we're seeing now, it's likely not to be permanent. So they're not too worried about it. Their whole focus now is getting back the 10 million jobs that were lost during the pandemic. And so the closer we can kind of getting back to that, which, is very anomalous because people aren't working because the government's paying them not to work. So look, these are things that I don't even like to think about. It just makes my head hurt. It doesn't really help us a lot to even understand all of this stuff. You just need to know that these things are very consequential, and at some point, they're likely to have ramifications and huge volatility. Maybe not now, but over the course of time. So these jobs reports are becoming consequential from a monetary standpoint because it'll determine how the Fed either keeps its policy, modifies its policy, changes its policy, and they're all always opens up the possibility that if they've got to do a giant kind of modification because they let the cat out of the bag, then that would create a huge shock to the market, and that kind of thing. Meantime, Upstart's at 240. Wow. You can see, 45 is 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there. So you can see how this is going crazy now. You can see how the market just going nuts. I bet like $1.6 million on this position. I'm showing right now $23,000 gain.